right, my guest today is Kelvyn Chuah, the founder of SINEGY. For those of you who don't know, SINEGY is a digital asset exchange based in Malaysia and is one of only 4 registered with the local Securities Commission. Thank you very much for being here, Kelvyn.
Thank you for having me, Kevin. Very nice to meet you in Penang last week. So thanks for having me.
If for anyone that doesn't know, Penang is a phenomenal place to go to. Great food, great weather, highly recommended. So Kelvyn, one of the things that I always ask every founder that I speak to is I'm always curious about the origin story. So take me back. You know, you're in the digital asset space. How did you launch upon this endeavor? What was the initiation of the idea, and where did it start?
Okay, so everything started early 2017. At that time, I was in a very different business, right? I was in boutique hospitality because Penang had just obtained the UNESCO listing in 2008. So there was obviously, we felt that there was actually a room to create boutique homestays, right? Heritage boutique hotels, etc. For people who want to experience the heritage side of Penang. So we started the first 5 boutique homestay in Penang. And it was quite amazing because when we first started, we would have MTV DJs staying with us, you know, and when these guys show up, we would be quite surprised. But also, I think if you go a little bit back, I was actually in New York. That was where I started my career. So I've had a pretty long career in capital markets. So I started working in Fleet Bank, which was eventually acquired by Bank of America. So I started working on the help desk, and then eventually moved my way up to become a trader and eventually a market maker for the bank. So I've always had that foundation in finance. And then when I came back from New York, this was when I was about 25, 26, a couple of high school friends of mine got together and wanted to start a software development business. So in total, there was four of us from the same high school. So 2 was in a way we funded the business, and the other 2 person ran the business. 5 years on, they decided that they all wanted to move on to their own thing, and eventually we all parted ways. So one of this guy that was involved in this software development company, it was called Omanware. He came to me in early 2017 and he said, I think this is a good time to start a crypto exchange. And I had heard about Bitcoin, but never really researched into it. So I thought, okay, let me, you know, I normally do like a morning runs before I start work anyway. So I said, okay, I'll just use the time that I spend on the treadmill to look up YouTube on what Bitcoin is. And 2-3 months later, I think like most people who discover crypto, right, you get a sense that once you understand how it works, the blockchain technology, etc., you have a feeling that, hey, this could potentially be like a global currency, right? And that's when all of a sudden it clicks, and then you think that, wow, this is something that's going to change the world. So I went through the same thing. And then when I discovered what it was, and having that foundation in finance, understanding how exchanges work, I got really excited. So I went up to some family and friends, and we raised about 1.25 million ringgit from them. Most of them came in because they said to me that I've never seen you this excited before about an idea, you know. So we started 2017, and we were trading mostly, right, at the beginning, because we weren't really sure which platform to build. I think if you go back far enough, there's always that question that should you have built a peer-to-peer trading platform such as local Bitcoins? Or is it better to build a centralized exchange, right? And the answer to that is, if you think that regulations are going to prevail, it's going to be in every jurisdiction everywhere in the world, it makes sense to go with a centralized exchange model. Because beyond us collecting a fee for matching trades, we are also the KYC point, right? This is where you come and do KYC, so you know that the counterparty of the trade is someone that you can trust is a real person, and hopefully like with the sanction checks that we're doing, there's no terrorists on the other side, etc. So when we first did it, we felt, okay, we actually, the first version of SINEGY was actually built as a peer-to-peer trading platform. But then subsequently in December 2018, when crypto was prescribed as security and the purview fell onto Securities Commission, we felt that, okay, this is the turning point. So we then got the team together. We were given only about 2 months to submit for an application. It was a very tight period, and we came up with like a 300-400 page application, and then we submitted it. And if you did not submit the application within that deadline, you would have to cease and desist your operation. So I think in total, like from what I know, about 20 over companies submitted for it. The number could be higher. And then subsequently, somewhere in June, you know, like we received a phone call, you know, that we got the conditional approval. And obviously that's the start of everything, right? We were given 9 months to put everything in place before we did our final go live interview, which actually took place on 31st March 2020, right at the start of the first movement control order, right? So this is the beginning of COVID. And then we got the official letter, and then on April Fool's Day is like essentially what we shared on social media, that this is not an April Fool's Day joke. We're actually going live.
A bit of interesting timing there, yeah?
Yeah, interesting timing for sure.
Yeah. How was that process in the beginning with the regulatory environment? Because I imagine when, and I'm guessing at this, but most jurisdictions are still trying to figure out their regulations. You see new ones coming out of Singapore. The US is still trying to figure out theirs. When in that beginning process, there's a bit of a learning curve for the regulators as well, because they're trying to figure out what's appropriate from a requirement standpoint as well. How was that process? Were the regulations fully formed, or how were those interactions with the operators in the space between the Securities Commission and yourself?
I think with the Securities Commission, right, at least with the team that we dealt with, right, I'm not sure if you know, but there's been senior management changes at SC mid of this year, right? So chairman stepped down and a few other people left as well. So we were communicating more with the older team there. They were very progressive. They were very progressive to the point that I still remember when we started the business in mid 2017, one of the first meetings that I got was with the digital team at SC, and we started the business in July 2017. We reached out to them in August 2017, and they were kind enough to actually wanted to actually meet with us, right? And I went there not knowing like who I was going to meet, but it was a very formal session. There were quiz and teh taricks on the table, etc. And then when I left the meeting, I realized that these were all the important people there. So they obviously knew about the asset class. They knew that they knew about the potential, etc. But I think it wasn't the right time for them to start anything, And I think that was probably because cryptocurrency, think about that word, right? Cryptocurrency. So in Malaysia, we are a bit different compared to Singapore, when you have the Monetary Authority of Singapore, which sort of regulates everything. So in Malaysia, the Securities Commission sort of regulate things from a securities perspective, and then the central bank regulate currencies from a central bank perspective. So they took a dual regulatory approach to this asset class. So Bank Negara, which is central bank, will regulate more on the currency side of things, and then that's where they will make the calls whether stable coins are permissible to trade, etc. And then SC will regulate it more from the securities side. So I would say that they were very progressive. They spoke to us. They wanted to know things like, what do you think is the right paid-up capital to set for this industry? And I remember I told them that, look, if you put this figure, it will be too high. Maybe a lot of people won't be able to even apply for the license, right? And then they said, yes, but then in a way, you're also making it such that only companies that can afford to be in this business will run the business, not any small, mid-sized companies, right? So I would say that they're very progressive. And engaging, you could always get a meeting with them, and they would always be willing to hear you out. So I find that was one of the things that really impressed me about SC.
Okay. And how long did the process take from start to finish? From you were given this short window in order to submit your application. But once that application went in, you said you got the news within just a few months?
Within 4 months. So the application, we were given 2 months, right? The moment crypto was so we actually started reporting to Bank Negara as a reporting entity for crypto, and this was all voluntary, meaning you reported stuff to them, you send them Excel sheets on the volumes that you did, etc. And it was quite funny because in the early days, like we call it the hit list, right? The reporting entity list is actually the hit list because it's where banks will go to find companies who are in the crypto space, and then if they find out that you have an account with them, they'll shut you down immediately. So when it was prescribed as security and SC sort of regulated this asset class, there was I think the window that we had was about 2 months, and this was in December 2018. And obviously, as you know, I'm Chinese, and Chinese New Year normally falls around February, right? Yep. So we still went around and had our celebration and so on. But then when we came back to the office, we had 14 days to put together the application, which we managed to do and submitted, like I think at like 11 p.m. before the cutoff time, you know. And then subsequently after that, like I said to you, right? Normally I go for my morning runs. The following day I went for a morning walk instead because I was thinking, damn, if we don't get this license, I'm going to have to, you know, really rethink about letting people go and you know, basically just move on to something else. So 4 months later, somehow, thankfully, touch wood, you know, fingers crossed, we got the phone call, you know.
Okay.
Yeah.
Okay. Have the regulations evolved much since that date, as the knowledge base amongst the regulators, as there's been a lot of news within the crypto space as well that's kind of inspiring regulators to do more? How have you seen that impact your business and the regulations?
So I think this year was clearly a very interesting year with what happened, starting with Terra Luna, right? The algorithmic stablecoin that obviously collapsed, and then it created that domino effect for hedge funds like 3 Arrows Capital, asset lending platform Celsius, and the most recent one was the most surprising for everyone, which is FTX. I think from the get-go, from the very beginning, SC was always very conservative about listing new tokens, etc. So on our platform, we currently have only Bitcoin and Ethereum, but the new tokens that are permissible to trade will be listed first quarter 2023. So if you think about it, right, by then being conservative on these things, it actually protected the retail market, you know. I don't know many people personally who have exposure to Terra Luna. You definitely won't have exposure if you came through our platform. In terms of new models or what are the new things that they are doing, before I go into that, let me just point out that in Malaysia, the regulations are a bit different because we actually use a trustee, right? So a trustee is actually independent, they are third party, and at the same time, they're also regulated. If I remember correctly, I think the whole Malaysia, there's about 14 regulated trustees. So Maybank has their own trustee, MBank also have their own trustee, and then there are the smaller ones, right? So we use Universal Trustee, and we have to use them because one of the requirements to obtaining this registration to be a DEX was to keep client funds segregated. Now, in different jurisdictions, you're actually allowed to commingle client funds, and those things, like I kind of it shocks me a little bit, right? That how can companies actually commingle client funds with their own company assets? Because you know, you'll be paying company salary from the same account, you know, like, you know, your vendors, etc., right? So how is using a regulated trustee different? Well, number one, the bank account doesn't belong to us, right? So the bank account that we use to pay staff salary, pay our rental, etc., that is actually Synergy's corporate account. So a client trust account is actually, it belongs to the trustee. So as an example, fund houses like Public Mutual and all that, they will normally house client assets under a trust account. So a trust account, number one, segregates client monies, right, from the company's money. So it's clearly separated. So what happens when, let's say, a client does deposits? We have online viewing rights, so we can actually go into the online banking to check whether deposits coming in are first-party transfer to make sure that they're not third-party transfer. So we can actually do approval. But when it comes to withdrawing funds, that withdrawing rights belong to the trustee. So normally what we need to do is we need to email them and say, okay, here's the list of clients that wants to do withdrawal. They'll go through the list and then say, okay, well, it doesn't look like there's any conflict here. These are all their clients. It's not synergy to synergy. And then after that, they'll approve it. So I think looking back, these are clearly the controls that benefited the industry, and hopefully will be the foundation of how things need to be done going forward, right? In light of what happened at FTX.
Is this trustee relationship primarily associated with the fiat currency that they have on your platform, to where there's a dedicated bank account in order to house it? Or does it also apply to when they've acquired Bitcoin or ETH or whichever?
It's a very good question. So it started out being a fiat custody only, right? But then SC wanted the custody, the trustee to also play a part in the role of the custody of digital asset. So in the early days, obviously, these are traditional trustees, right? Their clients are like mutual funds, you know. Probably the more forward clients are e-wallet operators, etc. So when we told them about crypto, they were very new to it. So we actually had to like show them how to do it, like how you can use this program, and then you take one key, I take one key. We'll use this laptop that never touches the internet to ensure that it's air gap, etc., etc. So we showed them how to do it. Yeah, we had to show them how to do it for Bitcoin, and then for Ethereum, it's a different software entirely. And then it's funny that they're now charging us for it. so
you taught them, and now they're charging you.
Yeah, it's not a high fee, but obviously we have to pay them to pay the role, right? Yeah. So we keep a big portion of the crypto asset actually in cold storage. So as a rule of thumb, maybe just use 25%, 75%. So 25% is on the hot wallet, 75% is in cold storage. So cold storage is obviously unhackable, right? And then we will daily do a rebalancing, right? We will check and see if there's not enough funds in the hot wallet, then we'll rebalance out. But when we rebalance out, it's important to note that we are one of the signing party. The trustee is the other signing party. So that means we can't just move the funds without their consent. So it creates that check and balance, right, for the business side. Yeah. Okay.
So let me switch gears a little bit. And so when you're in process of launching, setting aside the regulatory standpoint, when you're simply in the process of trying to acquire users to come on, whether they're actively trading, if they're hodling, just to simply utilize the exchange, how do you get word out amongst the population that this exchange is here, that it should be the preferred option, etc.? How do you build the reputation?
So as you pointed out, originally there were 3 companies with that could do the business. The 4th company was only given the green light, I believe, sometime in July of last year. So everyone kind of does it their own way, I would say, because obviously you in a way, I guess, having the license and the registration in a market like Malaysia, you're in a way insulated, right? Because why you can't get a Ringgit Malaysia account outside of Malaysia because you're a capital control country, right? But in a way also you're immediately competing with 3 other companies, right? So for us, normally what we do is we use a little bit of social media for marketing. We don't use like the big ticket items like billboards, etc., because those are obviously very high budget. And we focus on partnerships, right? So we go out to people who are willing and willing to consider a partnership with us that has that client base, and then we get consent from the regulators to actually partner with them, and so far that's been a good angle for us, like essentially not going head on with the other players directly, focusing on a partnership that can bring us the user base. I'll give you an example. FA Advisory from Singapore. They are the largest independent financial advisory network in Singapore. They are our partner. A few months ago, we also got a partnership approved with UOB Kay Hian. So for those of you who don't know, UOB Kay Hian is Southeast Asia's largest brokerage. I think in Malaysia alone, they have over 100,000 trading accounts. So these are the areas that we focus on. True to our name, Synergy.
Yeah. Okay.
Yeah.
And do you find that the perception of the space has evolved? And I ask that because I remember the early days when I kind of went down the rabbit hole and got interested.
Yeah.
The first thing people would say is, that's for money laundering, the illicit trade, all of those things, which to me didn't make sense because all transactions are public. They're pseudonymous, but it's all public. So it never really made sense that it would be. But have you seen that perception in Malaysia in the early days, and have you seen it evolve?
Yeah, I mean, to add to that also, right, is that like this money laundering happen even with traditional finance. During this time, it happens, right? We all know it happens, right? People still do, movements of cash. I think it's an open secret that if you go to money changers, they can do hawala transfer, right? And you can't really stop these things, right? Because there is a demand for it, right? And why is there a demand for it? So let's not talk about the black stuff, like the drug stuff and all that. Let's talk about the business perspective, right? Like people use this channel sometimes because they save money, right? If you go through the bank, the spreads are wide, So if you go through money changers and they can help you save maybe 0.5% or something, there's an additional margin to your business, right? So these things will always exist. And when people use crypto for money laundering, I think, like you say, right, there's a trail for everything. Even Bitfinex that hacked, like they were able to track down this person eventually. So this is why, I think it's something that people always say, but if you think about the true potential of the business, maybe a part of it is that, but there's a huge part of the business that a lot of people from capital markets believe that maybe this is the new asset class, the blockchain technology that could power the future of capital markets, right? Because let's be honest, right? Why is this the only asset class that trades 24 hours a day and 7 days a week? It's because the settlement layer is a blockchain technology, right? If you come to our office in Penang versus going to a trading floor, the trading floor is probably half the size of the back office where, you still have a lot of people, etc., right? Contra notes that needs to be sent out to clients because, I need to collect payment, etc. But in crypto, if you come to our office in Penang, there's no back office, we run an exchange and there's no back office, right? So there's something there that I think people should open up their eyes to,
Yeah. I mean, a lot of that infrastructure has now become a public good because it is the blockchain. It is on chain. So it's really eliminated layers of middlemen to an extent. Yeah.
Yeah, you're absolutely right. I think that is like the best way to actually describe this asset class, right? Because it is a decentralized asset class. No one controls it, And because of that, if you think about it, like even for an exchange such as us, because there's less intermediaries, there are things that we can do that we could never do in traditional finance. Like if you came to Synergy and then you place a limit buy order, and someone sells to you, you actually earn a trading rebate. Why can't you do that using a traditional brokerage model? Because there's the brokerage that earns something, there's the clearinghouse that earns something, everybody earns something along the way. But in crypto, because it's a decentralized asset class, a lot of these intermediaries don't exist anymore, Yeah.
Okay. So I'm curious, when you look at the space, what do you see as the biggest threats to broader adoption? Because I can't remember the statistic, but I want to say it's somewhere in like the single digits or maybe low double digits of population that is adopting. But when you look at like the risks towards broader adoption,
Yeah.
What do you think is the biggest hurdles that the overall crypto space needs to overcome?
I think definitely the bad actors, definitely the bad actors, because you sort of like I'm in Penang, right? So I think we were at one point quite a hot spot for a lot of these Ponzi schemes, right? We call them money games, and a lot of these guys were using crypto as a transaction layer because it was easy to move things around without going through the banking channel. Yeah. And when things like this happen, it sort of like create an association to Bitcoin that it's not. I mean, these guys use maybe, let's say, their own private token, private blockchain, etc. But the perception is that, Bitcoin is like this, right? Bitcoin is like this, right? So we have to sort of go out there and re-educate the masses, right? That's not really Bitcoin. That's the company's private token, private blockchain. Bitcoin doesn't work that way, and you have to, like basically educate,
Okay.
Yeah.
Okay. And what about when at some point, you see across the globe, a lot of countries are starting to experiment with their own digital currencies.
Yeah.
How do you see the impact of that? Do you welcome it? Would it be something that you would be keen to have on the exchange as well?
Definitely. I'll give you one good example, right? So when we started the exchange, this was in April 2020, right? In the first movement control order, every deposit that you do into the exchange using crypto asset, Bitcoin, Ethereum, everything is recorded automatically, right? So every deposit, every withdrawal that you do, everything is happening in an automated manner, right? There's no human intervention, right? We recently only enabled automated fiat deposit. Why is that? Why could we have done it for crypto sooner? Why couldn't we do it for fiat sooner? Because you needed the bank to give out a banking API. How many banks in Malaysia have a banking API? I mean, not many, and we were quite fortunate because we use UOB Bank, and they recently, I think last year, they announced that they were launching a banking API, and we were selected as one of the guinea pigs to test it out. So if you imagine if you have a CBDC in Malaysia that could, that I could use to send funds to you, etc. You don't need to wait for all the banks to come up with their banking API. You just use this new transaction layer, right? And this new transaction layer can be banking APIs out there, and be instant, having the record, which is immutable, etc. All these things,
Okay. I wonder, and this might get a little bit wonky on the economics of it.
Yeah.
But Malaysia has currency controls, so there's a number of restrictions that are in place in respect to the local currency.
Yeah.
And you see it in many places in the world where they're quite sensitive around that, and part of it is because their policy tools, whether monetary policy or fiscal policy, they utilize the currency and those sort of levers.
Yeah.
But when you talk about an international currency like a Bitcoin or an Ethereum that has no government affiliation, I've heard people make the argument that that eventually it could be seen as a threat to their power, and that one of the biggest risks is the potential for them to kind of regulate it out of existence.
Yeah.
Do you think that that's completely misplaced? I don't know whether or not we need to get too technical on it, but do you think that's a misplaced concern?
I think there's room for both to exist, right? Meaning, you have there's room for both to exist. So for those people who still prefer to not have that sort of exposure, want to remain in the fiat channels, etc., they can continue to use that, right? Like for us, if you look at the data that we have on the exchange, the majority of people who buys crypto assets are early to mid-30s, right? So they're the millennials, right? And these guys are also the people who are very into gaming, they're into the metaverse thing, they're into NFTs and all these things. And maybe in their world in the future, right, the fiat option will be an option that they may not want full exposure to. They may want to have some crypto exposure because they could use this maybe in the metaverse, etc. And it could have its own value and exist there, you know. So, and I think in terms of government stuff, like some people say it's a threat to the government and so on. I don't see that. I don't see that particularly so, only because, like, if the asset class continues to grow, right, and one day, like, and we're seeing it now, like 2 years ago, if you tried to talk to the CEO of a bank, crypto, sorry, no interest, right? Today he will at least meet you, and there are definitely initiatives coming, right? Certain with financial institutions that are working on something like a structured product, let's say, right? And these things will be a way for the masses to participate in an alternative asset class like crypto asset. So if you can see things from our perspective, if you sort of know who we're talking to in a way, you could see that adoption is coming, right? It's coming, but maybe it's not going to happen in next year, but maybe it'll take 2-3 years to play out. And eventually, when it grows big enough, then, you know, the ultimate institutional players such as a sovereign wealth fund will also get exposure to it. But at this stage, at this early stage, I think the foundations are still being put in place. Like, I think with what happened with FTX, obviously it's going to call into question a lot about how this custodian solution works, right? And then if you can solve this thing, then I think an asset manager will be more comfortable to actually you know, to hold a position in crypto asset as well, right? Because I want to know that, like, if you're a fund manager, how do you tell your clients that money just went missing? It's not so straightforward, you know. You need to know that I've done what I could to ensure that the money could not have gone missing, you know. Like, all the checkboxes have been ticked, you know, like.
Yeah, I mean, part of it is kind of hard to understand. I mean, the FTX one is quite interesting because of the spider web of how things ended up playing out. The exchange by itself was actually very successful and very profitable. There was all this other stuff of related activities that got them into trouble and caused some of the bad behavior on their part. But because things happen on chain. I mean, the biggest challenge is the commingling of funds. Because if you're keeping separate wallets, separate keys for each individual account, it's all on chain. It can be done in a very transparent manner.
Correct. It can be done in a transparent manner. So it's, you know, like, FTX was a good exchange. Like, they had good tech, you know, they had really good tech. In fact, I think after they filed for Chapter 11, and, you know, we had to go back to some of the other exchanges, the older exchanges that we were using, we felt that going back in time, you know, they had good tech and they were making money. So I think the part that I'm still trying to figure out was, why did they have to do it this way, right? Because they were profitable. You know, eventually, if they needed to launch a $1 billion fund, they could have done it just given time, you know, like that. They didn't need to be, they just needed time, right? They would get there eventually, you know?
I mean, from my understanding of it, it's the other activities. It's the hedge fund arm that ended up accumulating losses, and then they just like, when you end up digging yourself a hole and you try and get out of it, you end up digging it deeper and deeper. And the moment that tweet came out and there was the run on the bank and things just kind of, that house of cards just ended up collapsing. But the exchange was just kind of pulled down with it, even though it was actually doing pretty well. But it's. So
you're right in a way, right? They should have let Alameda just like
split it.
And then FTX International would still be solvent, right? Just let Alameda, you know, go down.
But it seems like the thing that got them into the trouble was that when Alameda started to end up having the trouble, that they took some of the customer funds to try and bail it out, hoping that they could end up making it back, which is where the whole Ponzi component seems to have played out. I guess
Yeah.
still more information continues to come out in
correct.
relation to
More
what
information
actually
continues to come
happened.
out. Yeah.
So let's switch gears a little bit and talk about the future of Synergy. So when currently you have Bitcoin and Ethereum as the sole assets that can be traded on the exchange. What do you see as the future? Does it open up to a broader range of assets, NFTs? There's a whole variety of tokens and so forth that are digital assets within the environment. What's the future for Synergy?
Well, definitely to list more tokens. I think based on what we suggested to the SC early last year, we hope that they would immediately have a blanket approval for the top 20 crypto assets to be listed on the local exchanges, excluding stablecoins, right? So like I mentioned earlier, stablecoins is under the purview of the central bank. Okay. And in order for them to protect the sovereignty of the Malaysian ringgit, they have decided to not allow stablecoins to be traded yet. I think some of the things
when you say stable coins and the central bank, it's referring to stable coins that are
priced in US dollar.
Ringgit.
Yes, priced to US dollar.
So even like USDC is not permitted in Malaysia.
You can trade it peer to peer. So if let's just say you wanted to buy 100 USDT from me, I have inventory, I can sell to you, right?
Yeah.
But you're not allowed to offer it on the exchange level. That means you can trade it amongst yourself peer to peer. You can't actually offer it on an exchange, a regulated exchange such as us. So you can't find like USDT/MYR. It doesn't exist on any of the local exchanges. Yeah.
Okay. Interesting. I was thinking at first whether or not like doing a stable coin that's focused on the ringgit.
That one different because that one is sort of CBDC, right? The person who's issuing it will be the central bank. So that one, I'm sure if they do it, like it will gain mass adoption. Sure.
I mean, to be honest with you, it's not a huge leap, and maybe I'm lacking on some of the technicalities, but to launch a CBDC is not a huge leap from some of the e-wallets because a lot of those transactions are settling virtually anyways. You're not transacting in physical cash, and so the necessary leap to go from one to the other doesn't seem as cavernous. It doesn't seem as wide. To accomplish that.
Yeah, I mean, from an e-wallet perspective, it's actually like if I send you 100 ringgit through Touch and Go e-wallet, right? The money is actually not really transferred, right? It's just a database record that changed, right? Meaning now I got 100 more, I got 100 less. So if they replace that with, let's say MYRT, right, CBDC, it just means that it's not just a database record anymore. It's everything is recorded on the blockchain now, and anyone can see all the transactions between all the different wallets, etc.
I think the one thing that I've always heard people comment when it comes to CBDCs is it's on a blockchain, but it's a private blockchain owned by that's run by the government. So I've heard people kind of comment that a lot of the countries that were early adopters are also ones where their home currencies were not very stable. So you see it in hyperinflation markets of like far-flung like Zimbabwe, Venezuela, these sort of places. And so it always raised the question of would you put the faith into having the keys to and the control of a private blockchain to those same authorities? But I guess that's a whole nother rabbit hole that we could.
It's another. I mean, of course, if they can give some sort of like assurance, right, like FDIC insured, like that sort of thing, that is different.
It would be interesting to see some of those components come into the space of insurance associated with the. In the States, we have depository insurance. We also have a thing called SIDC for brokerage accounts as well, in order to ensure in case something happens with that entity. But I haven't really seen any, and maybe I'm just not keen to it. But I haven't really seen that level of innovation come into the crypto space as of yet.
Crypto not yet. But I see it on e-wallet. Like I think Touch and Go has just insurance thing, right? Where when you have funds on the e-wallet, is insured up to a certain amount. So in crypto, I think eventually it will come, right? Like I think BitGo, right, as one of the big wallet and custodian in California, they have insurance up to I think 100 million of client assets by Lloyd's of London. So I think over time, more insurance company will take a look at this and say, hey, look, there's probably a premium that we can charge here, and as long as we know that certain checks and balances are in place, we can, offer an insurance to these guys.
Okay. So let me wrap up with one more question before we do the kind of the closing set. When you look forward and you're kind of planning out the future of the exchange, obviously there's a question in regards to the ability to launch new tokens onto the platform and so forth. But when you look at your own activity within what you actually have direct control over, what are the key components when you look at it and say, in order for us to be successful, we need to get these things correct? What are those things that you see as like the critical success factors for you?
Definitely transparency, right? Transparency is one of those things. I think if you go to coingecko.com, there's maybe a list of about 10 exchanges which have done that proof of audit, right? A lot still haven't done it. I don't know if this will be imposed on us, but this is something that I personally want to do, right? Meaning we disclose what we have in terms of client assets on the platform, let's say. The thing is this though, I mean, there's always going to, you disclose that, you're also telling people like how big you are or how small you are, So it benefits the international players which have large user base, right? But for a smaller player like us, you also almost have to hope in a way that people see that transparency as you trying to play your part, right, in growing the business. So that's one thing. And yeah, I mean, transparency is definitely one of them. Yeah.
Okay. So let me do my standard closing questions here. Sure. So the first one is, what is a tech tool that you just can't live without?
Cloud services. We don't have internal service, so cloud is important to us.
Definitely. Last question here. So if you were to talk to another founder that's just getting started out, and maybe in the crypto space, maybe in a different space, but they're just getting started out, what is the biggest piece of advice that you could offer another founder?
Be very lean. Be very, very lean. Because I think in the world of startups, right, an idea is 1%. The work is actually 99%. So you will be, if you're not lean enough, you can't. I mean, you won't have the runway to succeed, right? So look at the successful companies in the space. People like CoinGecko, Bobby Ong have always stressed, right? You got to bootstrap. You got to be lean. Like this is one way to withstand this industry, right? Because we're not in Silicon Valley, so you're not going to get a billion dollar check from Anderson Horowitz, etc. You're in Malaysia, so you have to be realistic about that. And also, I think if you choose to be in a forward space like crypto, there's a lot of like ups and downs, right? Because it's evolving very quickly, right? So if you're in crypto, you have to be prepared for that ups and downs because it evolves very quickly. In probably other fintech, insurtech, etc., you won't have this sort of volatility, or it will be more stable,
Yeah, I like the aspect of the idea is 1%. Because so many folks kind of fall into this aspect of like they ruminate on the idea for so long, but it's the execution. And the only way that you can execute is being lean and making sure that you're getting a solid ROI on the resources that you're putting into it. Because like you said, we're in Malaysia right here. And so it's not the huge pockets. Although I hope Mark Andreessen and Chris Dixon and those guys are listening in here and saying, maybe we should be putting billions of capital into
come here. There are. I mean, if you need to set up something this part of the world, we are exactly halfway across the world, right? So this is make Malaysia the hub, right? We have progressive regulators, we have affordable workforce, which is multilingual, and it's a great place to live. I mean, it's a great place to live.
And where you're at in Penang has probably some of the best food that you can imagine.
Yeah. Good street food.
Yeah, exactly. Awesome, Kelvyn. This has been a fantastic conversation. We dug into a lot of material here. I really appreciate you taking the time.
Don't mention. Thanks for having me again, Kevin. Yeah. Thank you so much. Yeah.
Thank you.
Yeah.
All right, that wraps it up for another fantastic episode of the Sea of Startups. If you've enjoyed this episode, please share it with a friend. Go onto iTunes or wherever you get your podcasts and leave us a review. It's the best way for us to get discovered and to have these startup stories reach a broader audience. If you have any suggestions or would like to get in touch, you can email me at kevin@indelible.vc. As always, I'm your host, Kevin Brockland from Indelible Ventures, and this is the Sea of Startups.